Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back everybody and welcome back to the channel. Today we are going to look at the 4 components of trading that you must know if you want to become a profitable trader. If you actually want to become a profitable trader and you don't know these 4 components that sum up to for you to make a successful business as a trader, then you are actually lacking. Most of you guys know what I'm going to talk about, but you have been overlooking. So what you're going to learn today, the ones you know, you keep them. The ones you have been overlooking, you correct them. The ones you don't know, you learn how to do them. Because these 4 components you're going to learn today is what actually makes you a profitable trader. You see, most people on YouTube here shows you the profit of taking $100, how I grew $100 all the way to $100,000 and within 2 days, and I bought my Lamborghini. So because of that, new beginners here think that trading is very easy, so they just can deposit $100 and take it to $100 million with just clicking buy and clicking sell without learning actually what makes actually a complete trading business, because trading is a business. All those guys who are showing you those things, I can tell you for a fact that they are all lies. Okay, they are just YouTubers. They make YouTube entertain. They entertain you guys on YouTube, and those videos get more views. You see that those videos, how I bought my Lamborghini, how I bought my house in 3 days trading, how I this, they are all fake videos. Not that I'm pointing into anybody, but what I'm trying to say that they are just showing you those things so that they just get views. They are just YouTubers. They're not real traders. Okay, real trading takes knowledge and takes time if you want to learn how to trade. That's why you must learn this concept, because people think that it's easy to trade, so they don't need anything to learn. So they just begin to click buy and click sell, and all of this while you are still losing, but you are still doing it. That's what I don't understand. Okay, so please, you are going to learn the components that come together. You must learn this component that come together for it to make you a raw profitable trader, because trading is a business just like any other business. Just that trading is better than any other business, but it's just like any other business, any other career. You must learn what it entails. It's not just about clicking buy and clicking sell. You must learn everything about trading, and then when you become profitable, just like any other profession, but it has more advantages than any other profession. That's why we prefer trading. That's why we focus on trading. Okay, there are so many advantages trading can give you: time freedom, financial freedom, and so many things. But it's not as easy as people show you. As you take how I grew $100 into $10,000 in 3 days, guys. It's not like that. Okay, so today pay attention to what I'm going to teach you and learn them. The ones you don't know, you learn them. The ones you know, you pay attention to them and practice them more. Okay, so let's go to the charts and let's begin with today's video lecture. Okay, so to become a successful or a profitable trader, because we trade as traders to make profits, that was our main goal. Our main goal is to be able to make profits out of the market. So to be able to become a profitable, to be able to trade and become profitable, to make profits from the market, you must be able to understand these 4 key elements, or these 4 key components, or I would say 4 secrets that you must know. The first one you must know is that you must have a very good strategy, good entry strategy. When you say a good entry strategy, what does it mean? You can never trade the forex market without having a strategy. A strategy is how you are going to actually enter, or you are going to buy, or you are going to sell out of the market. You are going to set how you are going to set your stop loss, how you are going to set your criteria. You must have a very good entry strategy. So the strategy should be able to give you at least 60%, 50%, 60%, even 45%, you can become profitable. So let's see that a strategy can be anything. It can be trending bounces. So let's say, for instance, your strategy is, okay, I'm going to look for a retrace pullback, and I'm going to buy here when the market is going upwards, and I'm going to join the trend upwards. It's not any fancy strategy, just as simple strategy as it is. That's how we do as professional traders. There's no any secret strange strategy. They are just simple strategies on how market moves, how just simple things like support and resistance, like as simple as, okay, I'm going to wait, and when the market hits support zone or resistance zone, then I'm going to sell, or I'm going to buy and take the market up. As simple as that. These are simple strategies we trade. The last concept I taught here was initial balance, where let's say the chart, begins from this side, and you say, okay, I'm going to trade initial balance. When the market makes initial balance, I'm going to mark my initial balance, and then when the market breaks the initial balance, I will find a strategy and I will find a way to enter the market. As simple as that. You must have a good trading strategy, because no matter your capital you have, if you don't have good trading strategy to be able to buy and sell out of the market, then you can become profitable. So your strategy should be able to at least give you at least 45% win rate, We would give you 50% win rate. We would give you 60% win rate, all the way up to 70% win rate. The reason why I'm saying all the way to 70% win rate, but not 100% win rate, is because there is no strategy which is 100%. And even a strategy which is even 90% has a less risk reward. And there is no such strategy that has 90% win rate which has a very high risk reward. So I don't advise that you take strategies which has higher win rate. Your win rate should be at least 70 or 60% so that you can get higher risk reward. You're going to go to risk reward later. But for now, put in your mind that at least your strategy you're going to trade should be able to give you at least 50% win rate, 60% win rate, or 70% win rate. So you must have a very good strategy before you can trade the forex market, or you can do day trading successfully. The next component you must know is the risk reward ratio. When they say risk reward ratio is about how much you lose as to how much you gain. So let's assume that you take a trade, like you want to take the bounce trade, like this setup for instance. So you want to wait for the market to pull up, and then you want to wait for retracement, and you join. So the question, risk reward, means that how much are you risking, how much of your capital are you actually risking as to how much you are actually gaining out of the market. So let's say you are risking $100, then your risk reward ratio should be at least twice, which is $200, as I've always been saying. So your risk reward ratio should be at least 1:1.5, 1:2, 1:2.5, or 1:3. But I always advise that you take 1:2, because that is the average risk reward anybody can take. Okay, so 1:2 means that if your risk is $100, your reward should be $200, which means anytime you take a trade and you lose $100, then you must gain what? $200. Anytime you lose $200, you must gain the next trade, which is going to be profitable trade. Wait for $400 to hit. If $400 does not hit and you take something less and it's not matching the risk reward ratio, you are not going to become profitable. Most of you guys here watching me, sometimes you are afraid. The day you set a stop loss of, let's say, $100, you're able to be patient and you wait for a stop loss to hit. But the day the market is rather moving in your favor of, let's say, $200, you don't wait. You wait for like maybe $100 in profit, $200 and $150 in profit. You don't even wait for it to hit the $200 and then you close your trade, because you are afraid that the trade may reverse and come and take your stop loss and you have a losing trade. But if you do that, you're not going to become profitable, because the days you are losing, you are patient to lose. The days you are gaining, you are not patient to gain. So in the long run, when you balance your losses with your wins, you can become profitable. Either you're going to break even or you're still going to be in loss, because when you're about to win, you didn't take your time to win. You cut off your losses. Some too, they are patient for their losses to hit, but when their profit moves a little, just a little, they begin to take their profits. So they would rather take smaller profit, and when they are losing, they lose big. If you do that, you can become profitable. You have to make sure that your risk reward ratio is very constant. Constant means that 1:2, always, you don't change it. You don't change your risk reward. If you're always risking 100, you make sure that you always make 200 every single time, 200 or more. Don't take something less, because if you change these metrics, if they don't work together, you can become profitable. If any of these elements has deficiency, you cannot, or has defect in the system, you can become profitable. So first, you must have a very good strategy that you are going to trade with. Second, your risk reward ratio must be constant. Don't take today, you take 50, the next day 50 is to 100, the next day you are very confident with your trade, so you take 200 with 400. Those days that you're even confident, that's when you're going to have a losing trade. So don't do that, okay? Always your risk reward must be very constant. Either you're confident about the trade, or you're not confident about the trade, or you're not sure of the strategy, or you're sure of the strategy. Your risk reward ratio must always be constant, and this is the secret. The only secret in trading that you can predict is the risk reward ratio. You can't predict your win rate ratio because it can change, but the risk reward ratio is what you can control as a trader. That's the only holy grail on trading. Okay, so if you are risking 200, make sure that always you're going to be making 200 and 400, which is as twice, 200 to 400, 200 to 400 as twice as it is. Okay, so consistent risk reward ratio is what you need. The next element you're going to need, the next element you have to focus on and you're going to need is your position sizing. What is position sizing? Position sizing is the amount of trade you are going to take with your capital. So let's say that your capital is just $3,000. And how much are you going to risk on the market? Are you going to divide the $3,000 into 3, as other people show you on YouTube here? Or you're going to put the whole 3,000 in the account and you're going to trade a single trade? No, you can't do that. If you do that, it's called gambling. You see, there is a very slight difference between trading and gambling. If you trade without any special skills or any system behind whatever you're doing, then you're gambling your money, because within a least second, you can lose huge amount of money. Let's say you are a new beginner, your capital is $3,000. How much are you actually supposed to risk? How much position are you supposed to risk? You're supposed to risk either 1%, 2%, 3%, 4%, or 5% maximum. Maximum 5%. Or maybe if you still want to take the risk, then the highest you can take is 10% of $3,000. 10% of $3,000 is what? $300. And $300, which means when you take any trade and you lose, you only lose $300 off your 3,000. But when you gain twice of it, which is $600. But I'm not advising you to take 10%. For me, as a professional trader, I take below 5%. But you, as a beginner, you might say, hey, Seth, 5% is too small. 1%, how can I make profit? 2%, guys. Follow my advice, okay? I've been trading for a longer time now, and this is what I do for a living. If you want to trade and make a living from trading, don't follow those guys who want to take bigger profits. Your goal is to take small profit just every day. If you just get small profit every day put together, you can make a very good living from trading. But if you want to take these guys, those guys, like share your account into two and put them all in a trade and you make millions within the next day, guys, you lose your money and you can never become profitable. Okay, so follow my advice. So your advice to take at least 1%, 2%, 3%, or at least let's say one. Let's even assume that you are still a beginner. You still have your dopamine. You just want to take more trades, fine, but don't take anywhere above 10% of your account. What does it mean? If you take 10% of your account, let's say your account is saying $3,000 and you're taking 10% of your account, then 10% is $300. So how many trades can you take? Assuming you are going through a losing trades, which you can take about 10 trades with that $3,000. But if you risk 5% of your account, you can take 20 trades, 20 single trades with that $3,000, even if things are not going in your favor. And it's not possible that you take 20 single trades and you get all your 20 trades to be losses. You see, that's why you break into pieces, so that at least even if you have losing trades, maybe losses, it doesn't really affect your account. The same way when you have win, it also grow your account gradually, but we don't jump. Okay, so always risk maximum of 10%, or advice, if you want to take my advice, then you can risk just 5% of your account. That's what you call position sizing. Most people don't even know how to calculate how much they have to buy per their capital, per the asset that they are trading. If you are trading forex, your position sizing, how much lot size are you supposed to buy to match your position? If you are trading indices, how much size are you supposed to buy to match your the capital you are trading with? Most of you guys don't know how to do it. This is why you have to learn this. You must take your time to learn the concept war of position size, because it's not just as simple as saying it, guys. If you take it as simple as it is, then you are actually going to mess things out. Okay, so learn about position sizing. Search on Google, read on position sizing. Okay, or just learn from any expert, because position sizing it's not just about, hey, I'm risking 5%, so you can put 5%, and you go to the chart, you don't know how much lot size you're supposed to buy. I'll leave that one in a different video. I'm going to do one video just purposely for position sizing alone, so that you understand how to size your position per your account size. Okay. Now, the next element that you must also know to become profitable is taking consistent sample of trades. No matter how good your strategy is, and you take the whole month one trade, do you think you can become profitable? One trade is not enough data for you to even decide whether you're profitable or you're even a loser. You must have enough sample of trades, which means within the month, either you're a swing trader or you're a day trader, you must take at least 10, at least 15, at least 20. Okay, so that you can get enough sample of trade, because when you're a beginner trader, you must be able to get more data to determine whether whatever you're doing, you're making profits or not. So let's say you must take consistent sample of trade. You must be trading almost every day, if not every single day, at least within the week. You must take at least 2 or 3 trades. Not like every single day you have to be trading, but at least you must be consistent. Don't trade today, the next month you trade one, and you are there. When you feel like trading, you trade one. If you do that, you cannot gather enough sample to be able to make you profitable. Okay, so gather enough sample, at least 30 trades, 40 trades, 50 trades. Let's say within a period of 2 months, within a period of 3 months, you're able to cover at least 50 trades. Or let's say within a period of 6 months, you cover 100 trades. You see, it makes sense. Then you can now deduct your losses from your wins. You see your profit. But most of the time, I normally use the monthly calculation. So let's say the whole month, just take 20 trades for the whole month. 1 trade a day. Just 1 trade for the whole day. There are a lot of currency pairs. Just 1 trade for the whole day. You can be able to get at least 20 trades for the whole month, and you can take out your profits from your losses, and you can become profitable. So Consistent sample of trade also makes you profitable. If one of these elements is missing, let's say you have a good strategy, but you don't have a good risk reward ratio, you are not able to consistently take risk reward ratio, then you can't see the profit because you'll be trading, but you can't see how to calculate your profit. You always go negative. On the other hand, having good risk reward ratio, having good strategy, and your position sizing is wrong. You don't know how to size a position per your account. It's to surprise you that you take only one trade and you lose everything in your account because you didn't size the lot size. What the lot size, the lot you are going to get, the lot you are supposed to buy, you were not able to buy it. You didn't calculate it well, so you thought you are buying 0.5. Don't forget that 0.5 is about some huge percentage of your capital, or you're buying 5.0 or 2.0. You don't know how to calculate all these things, then you can actually whipsaw your account. Okay, so no position sizing and then consistent sample of trade. If you know all these things, and then you are not taking the trades, then you can also become profitable. So these are the 4 key elements that makes you become profitable trader. Okay, so learn them and keep them. Trading is just like a business. You must use the business mindset to trade. If not, you can become profitable. If that's it, if you don't trade with a business mindset, okay, this is my business I'm doing, I'm buying and I'm selling and I'm trying to make profits. If you don't use that mindset and you think that you want to grow your account, so how can I grow $100 to $1 million, guys? If you do that, you can become profitable. Okay, so take my advice. I think that will be all for this video. I'm Mr. Towas, and thanks for watching. If you enjoyed the video, don't forget to subscribe and hit the like button. You're also welcome to always join the weekend training program. If you want to learn how to trade, you are serious about trading, set. I want to learn how to trade. Just feel free and send me a message. Hey, hello, Seth. This is John. If I think I'm ready. I want to learn how to trade, and I'll just tell you what to do. Okay, you don't need anything to learn. Just your phone with Telegram, with some Zoom on it and WhatsApp on it. That's all that you need, and then begin to learn how you're going to trade. Okay, so until then, please, anything I teach here, make sure you always go back and sit down and analyze. You can take screenshots and analyze it and ask yourself, how do I master these things? Because on YouTube, I can't make the video too long. If not, you guys will even leave the YouTube. Okay, so I have to make the video short, but you have to sit down and then relearn them and make sure you master them. Guys, trading is not a joking matter. It's easy and it's very good to trade, but if you don't know what you're doing, please, you're going to lose your account. Okay, there are a lot of guys around. Guys, I don't want to talk about it. So you keep learning it and then you become good. So that will be all for this video, and see you next time.